Now, we were expecting a loss, and that's exactly what we got. Oil giant BP's announced its worst annual loss in over 20 years. Underlying profits have more than halved compared with this time last year, falling to £4.1 billion. Well, figures for the fourth quarter, they showed a massive 90% drop as the year went on. Well, the company's blaming the 70% slump in the crude oil price that we've seen since mid-2014. And last month, the company said that it would cut 4,000 jobs globally while slashing billions of dollars from spending on new projects. And today, the firm announced that it will also cut up to 3,000 additional jobs in its refining business. Well, let's talk live now to Cornelia Meyer. She's Chief Executive of Meyer Resources. Cornelia, really good to see you as ever. I also want to talk to you about BP's dividend, because it's a really important source for dividend income within the FTSE 100. Investors very keen to find out what they're going to say on that. They are going to maintain the dividend at 10 cents per share for the quarter. But considering the shape the company's in, considering the price of the oil, and considering the fact that it's still dealing with costs related to the Deepwater Horizon spill, is that sustainable?
Well, they're trying to make it as sustainable as possible. I think Bob Dudley came out, the CEO came out this morning saying, yes, we want to stay there. And look at it this way. If you look at its peer group, all the other oil companies, the big oil companies, they maintain dividend. And in a dividend-strapped, in a return-strapped economy, he who pays dividends is king. And if they now, after this loss, also said we'll pay less dividends, that would have been even worse for the share price.
And another major focus today for investors was its capital expenditure. We know that it's going through this painful $2.5 billion restructuring plan. We already knew about the 4,000 jobs to go in its upstream divisions. Were you surprised by this further announcement of 3,000 job cuts to go in its downstream division?
Absolutely not, because if you look at oil companies, integrated oil companies, generally you have much fewer people working in upstream because it doesn't take that many people to haul it out of the ground, and a lot of people working in refining and marketing. So yes, that is usually quite fat, and something had to happen. Look, it's very, very bloody out there for jobs in the oil sector, so BP is in line with everybody else. Let me remind you that Schlumberger over the last 12 months the oilfield service company cut in excess of 20,000 jobs. So, you know, BP is by no way alone.
OK, Cornelia, we're going to have to leave it there. Cornelia Meyer, Chief Executive of Meyer Resources, talking us through BP's results.